Okay, thank you guys for tuning in to today's webinar. We are privileged and honored to have Peter Tuchman on our trading lounge today in partnership with Scope Markets. And we shall be speaking about trading the pandemic. So Peter Tuchman is the world's most renowned photographer man on Wall Street. His career has spanned over 35 plus years. He has been on the New York Stock Exchange as the most recognized trader on Wall Street. His first endeavor after college was a jazz record store and an African art gallery on Carmine Street in New York City. 2 years later, he sold the record store and took a job working in Africa for a Norwegian oil company. He returned to New York. He got a job as a clerk on the floor of the New York Stock Exchange, and it's up until today where he's been trading as a broker on the floor of the New York Stock Exchange. So welcome, Peter, and I know you will give us a brief introduction into your trading. So you can tell us briefly about your trading journey and how you're able to do what you love to present day, and as well as passing the same skill set to others, including your son.
Thank you so much. Thank you all in Nairobi and Sylvia's Trading Lounge. Welcome me. I am honored, truly, truly, truly. So I am, I've been trading for 35 years. My journey, as Sylvia described, has been, I grew up in New York City, and I was always an entrepreneur. I had a bunch of businesses when I was growing up in high school. I went on to going to university, and then I opened a record store in New York, which was an African art, which also was an African art gallery, which sort of connects us, at least in the first part of my life, to Africa. And then I got a degree in business and international business and economics at University of Massachusetts, which is not something, and I did go on to attempt to get a master's in business. I'm not, I believe education is a path to independence and growth. So that was just part of my journey. At the time, I did not know that it would lead me where it did lead me. I went on after college to start trading commodities. I just kind of got the Wall Street bug early on, and while I was getting a master's and while I had my record store. So I'm a bit of an alcoholic. You can a bit of a workaholic, not an alcoholic, a bit of a workaholic. And as you can see, I had surgery on my shoulder yesterday, yet I'm still here today. If I wasn't with you, I maybe take one day off and go back to work next week. But so, as Sylvia also mentioned, it's one of my taglines, which is if you find something you love to do, you'll never work a day in your life. And I try to inspire that and motivate that into young people, especially in this era in 2020, 2021, which I will discuss with you. There could not be a more exciting time to be alive, really. I mean, challenging time to be alive, but exciting time with social media, with the internet, with particularly somebody, I guess, people on your call and people in my world in finance and investment, right? We've never before in history seen the barriers to entry in the stock market be so low that not that it's low, but along the way here, the investing on Wall Street and in the stock market has been a career and a endeavor mostly of privileged people, and that's been and there have been challenges here in the United States, clearly globally, of people. You needed money to make money. You needed money to get in the stock market and the education and whatnot. And so what we have seen over the last year and a half through the pandemic is what I call a democratization of the stock market. The barriers to entry are down, and literally anyone with $100 and an iPhone can trade the stock market, right? We saw Robinhood go public yesterday, and I'm not endorsing Robinhood by any means, but they were one of the first players in the game where anybody with an iPhone and $100 could buy a share of stock. How exciting is that, right? I don't know what it's like in Nairobi, but in the States, to actually be a person in my grandfather's day, right? To get into to set up an investment or trading account, I needed a lot of money. I needed a lawyer. I needed an accountant. I needed so many things, which 90% of the people in the world don't have. So that it was reserved for the privileged, and that was a disadvantage for people who did not have that access. So to start off my chat, I want to welcome everybody who may not have been able to meet me or be involved in the stock market 5 years ago, 2 years ago, 20 years ago, right? So what an exciting time for us to sit here globally on Zoom together, thousands of miles apart, talking about the stock market. There couldn't be anything more exciting for me, somebody who's been around for a while, who loves to share their, many people who have been on my journey are now, trading the market. Their interest is not as much inspiring young people to trade the market as I am. For me, that's my journey. That's my mission. That's my message. Besides the fact that when I found something I love so much, and I'm sure anyone on your call who knows me or goes on to follow me knows my enthusiasm and the adrenaline in my tone and the excitement I have for trading and how I love to inspire people to do it. So all of my journey through college and growing up and an extraordinary family background that I had, somehow or other, it's sort of, it's not my will, it's God's will gets me where I go. So found me to the floor of the stock exchange, 1985, May 23rd, to remember the day exactly, because it was a pivotal day in what went on to be my career and is still my career. But I started at the bottom of, the floor of the New York Stock Exchange is the preeminent marketplace for equities in the world. Right now, after being around for 100 years, it is one of the only human marketplaces. What I mean by that is there are trading platforms throughout the world where people can trade electronically, where I don't see you, you don't see me. I don't really know what you're doing. We have no human interaction. It's strictly through technology. And the nature of markets, as you well know, in Africa, some of the greatest markets that I used to go to, in not particularly stock markets, but all kinds of commerce, right? Africa is the commerce center of the world. Unfortunately, a lot of people in the world don't know what an incredible, viable entrepreneur and business world goes on in Africa, West and East. But to go to a market in Lomé in Togo, where I used to go all the time, or in Cotonou, or in Nigeria, in Lagos, there's nowhere matched. The excitement there is unmatched. So for me, what drew me to the stock market was that human element, was the human interaction, and I describe what goes on in the commerce markets of Africa, as well as here. If you were to come, and I will invite you to be my guest in New York at the floor of the stock exchange, people can go on my Instagram page and see the pictures. It's wild. It's crazy. There are movies about it, what we call open outcry, where people scream and yell, bids and offers. Now, majority of these markets are traded through a machine, but still by people. But it's not what it was when I started working on Wall Street in 1985. You can Google me or go to any of the movies about Wall Street, and I don't recommend The Wolf of Wall Street, but the original movie of Wall Street, which I had a small part in, is people screaming and yelling, the adrenaline, the emotion, right? We all know that when you're talking about money makes people funny, right? It's a different thing when you're interacting, whether you're buying food or whether you're buying commodities of any kind, whether you're buying oil and whatnot. So that's the marketplace I'm describing. And so I think people find that incredibly attractive. It's incredibly exciting. That's why I think we see this new generation be driven towards Wall Street bets. I don't know if you guys know about these things that have been going on with the meme stocks, right? And the Dogecoin and crypto, right? in my opinion, I have nothing bad to say about any of it. Whatever caught people's interest to let them focus on markets, that's a good day for me, right? I don't care why you arrived at my party, but if you came to the party, I'm really happy everybody's here, right? Because it was a party that wasn't available. You didn't get a lot of people in the world didn't get the invitation. And right now, as I described, through trading apps and fractional investing and the just international technology, anybody from Nairobi to Kathmandu to Chile can buy 1 share or 10 shares of Amazon stock. How exciting is that? So these are extraordinary times. So I think it's exciting. And when you reached out to me, I was so happy to know that you had this trading group in Nairobi. There are people in Nairobi who are excited about trading and whatnot. We do know, I will mention my friend. I don't think you ended up meeting him. He's a very elusive character, but Wall Street Trapper, right? An American gentleman from New Orleans who has gone on to travel the world, inspiring people as I do also. And I hope one day that we all get to meet. But he was in Nairobi. He had a trading platform. He had a trading event, my understanding. And he went on throughout the world. I will be coming to Western Europe, to Italy in October, if the world reopens, to give a talking tour to explain to people about markets. So where does that leave us right now on July 30, 2020, right? 2021, excuse me. What an amazing time to be alive, amazing time to be in the markets. And it's extraordinary. As I describe, one of my other taglines is that this is not your grandfather's stock market, right? This is not the way things traded 2 years ago, 5 years ago, 20 years ago, right? What's going on now with technology, for one, with the new 50 million, the new generation of traders in the market, for number two, that's unheard of. There are 40 million plus new eyes on the stock market from Nairobi to anywhere in the world. And we are still in the midst and coming out of, hopefully, a global pandemic, which there's no playbook for, right? Could you have imagined if you and I met, 2 years ago, or is it a year now? A year ago in January of 2020, to talk about markets, what our lives would be like for the next 16 months, right? We could have never imagined it. And so what I also say is that what differentiated this crisis that we saw happen in 2020 is affected absolutely everybody on earth, right? I don't believe there was one. So we've had financial crises, we isolated. We've had other diseases and pandemics. You've seen them in West Africa with Ebola, in Africa with Ebola, and we've seen them in SARS throughout the world. And those were health crises. But never before have we ever seen a crisis that was physical, financial, and health that literally affected not a soul on earth, out of how many billions of people are everywhere in the world, had some effect, some relationship to this virus and this disease. And their lives were changed on March 15th of 2020 and may never be the same again. Whether they lost a loved one, whether they lost their jobs, whether their life just changed, whatever industry they were in, whatever mountaintop they may be living on and farming or whatever. There's not a soul on earth who is not affected deeply in many ways by this pandemic, right? And still in the middle of it, right? I don't know what's happening in Nairobi, but we know here we are back again in masking, and we are opened at the stock exchange. We spent a year and a half trying to reopen, but we're starting to see states in the United States that are being devastated once again by the virus. And I know it's happening around the world. Wherever people are unvaccinated, there's been this political craziness going on around the vaccine. I don't know if you have that in Kenya as much as we do here, but it's become very politicized. And where it ends up is it's affecting people's lives and livelihood, right? So before I embark on my tale of the day, talking about trading the pandemic, is there anything you want to ask me?
Yeah, so over the years, how different has it been while trading the pandemic as opposed to other financial markets crises like '07, '08? How different has this been from your experience?
Okay, well, you lead me into the story of the day, which is really what trading the pandemic, and why is this crisis different? Why is this crisis different than any other crisis? Right? We've seen, in my experience, I started on Wall Street in 1985. In 1987, people should read about it. It was a fascinating tale of the crash of '87, right? Which was very complicated. It's a long story, longer than I need to get into, but it was a financial crisis nonetheless. It was a function of the markets being very overbought. There was some great, sweetie, could you not do that? It was people were very over margined. When markets are very robust and strong, people tend to invest in the market, and I'm sure everybody on the call knows what it's about, called buying power and trading on margin, is that people will invest more than they are willing to lose. It's one of those things that if I invest, some trading platforms will let me put up $1,000 and I'm able to trade in value of $10,000. It's called buying power or margin. You can do it on the Robin Hoods of the world. And it's irresponsible because people, at least if people don't understand that they can lose more than they invest, right? Because this isn't gambling, right? We're talking about trading and investing. So the crash of '87, the markets were very robust at a very high level. Percentage-wise, much different than we are today, right? But yet at the time, things were what we call long in the tooth. They were in overbought status. There was a high level of margin. People were trading at the ultimate of their buying power. And then there were some questions about about the banking system. There were some issues about insurance and whatnot. And there started to be a fracture in the system. All of the hope and the love for the markets and the belief that we were on a strong economic footing started to crack. And it happened very quickly. You know, as things grow, as we build a house higher and higher from a foundation that is wide, and we go up like this, we build it. When you get way, way, way to the top, there's not a lot to support it. And very often we see that in markets. Markets can either build a new foundation and go over. There was all of the crises that you guys are what I call the coasts, right? These are things I can describe as we talk on. But when more than one, and especially in this day of the internet and social media, where information is unbelievable, right? I can know in the old days when a war broke out or something happened in an oil well, you know, wherever in Lagos or whatever, and that would affect a stock and a sector. It would take weeks before that information would get to me on the floor of the stock exchange before it was something I traded off of. Well, right now, you know, you can have a coffee with your friend next to you, and if someone was sitting, they would say, "Pete, our friends in Nairobi are having a coffee." I know instantly what you're doing, what's happening. The information highway is instant, right? And so therefore, it's what we have seen in the volatility over the last year is that instant reaction, whether it's human, electronic, or algorithm in the market relative to information. Information is the name of the game, right? Information is the lifeblood of volatility, right? So 1987 crash happened. It went in from a Friday. The cement on the outside of the building of the financial institutions and the economic foundation started to break, right? People started suddenly losing confidence. We were at a very high overvalued level. And we came in, some news came out, and as I described to you, what's called the perfect storm in my world, when more than one piece of the puzzle start to come into play all at the same time, right? When one storm comes from, just a rainstorm one day is just a rainstorm. But when we have a weather system coming in from here and a storm from here and a hurricane from here, and it all converges on one place, we have the perfect storm. And that is a crisis if I were to describe to you in financial terms. So the crash of 87 was a perfect storm of a lot of things. People should read about it because the history of markets is fascinating. And while I could sit here all day and tell you about them, there's a lot of great information and books about it because one crisis can predict another crisis, right? The stock market is based on historic data, right? Very often the decisions we make as traders, and I'm sure the people on the call will know, it's in relation to how the movie we saw yesterday, right? We always say that. We've seen this movie before. That's why I'm here to share my experience, because I've seen the movie before and the people on the call are new to the movie. It's their first viewing. So they want to know, what was it like the first few times I watched it? You know what I'm saying? Relative to the market. So let's go through crash of 87. It was fast. It was furious. To this day, the largest percentage of ever in one day. And there were fortunes lost. There were a lot of true stories, that once you've had money, it's not good to lose it or to not have it any longer. And the whole financial system crumbled literally overnight, right? And we saw the market lose value 30, 40 something percent that day. Well, I'm not going to spend a lot of time there because there have been so many crises since then, but still, if you saw of 87, we know that people get emotional about money, that every sell-off or crash or crisis or consolidation that we've seen in history has, from the long term, been more of a buying opportunity than a selling opportunity, right? We've seen it all along the way, but not everyone is able to sustain the losses to wait around for the gains, right? Some people get blown up. We talk about it now. And I believe in the last year, and I will talk about it, trading the pandemic, is more people lost money than made money. We are hearing about it on the internet, all of the Dogecoin millionaires and the Roaring Kitty and all these people who made money with Wall Street bets. And it's a lot of, I don't like to use bad language, but it's a lot of BS because most people got their accounts blown up. Most people bought GameStop at 190 and watched it go to 30 than people who bought it at 2 and sold it at 500, right? We hear different stories, that's the game. So anyway, do we go from crash of 87? Then let's go talk about, so it was a different time. There were no computers. There was no technology. It was very hands-on. That was my first, what we call here, cutting our teeth in the market. When a little baby's teeth come out for the first time, it's very raw. It's very painful. And so back then, there was no cell phones. There was no internet. I know people can't believe this was a time like that, but we didn't have social media or anything. I was trading on paper. I think I have, I thought I have one of the old pads I used to trade, and we would write orders down. We had 30, 40 telephones, and you can see it on videos if you go on the internet. Everyone at the end should, Google.
You send a screenshot, Peter. We'd love to have that.
It's a deal. I will do that. But those were the days where we were all on phones like this. We were dialing phones. We were dialing phones, talking on phones, screaming and yelling with paper and stuff like that. So that was the crash of 87. And it was a very difficult time for people in the marketplace. Let's go then to 2007. Obviously, the stock market itself, where I work, the New York Stock Exchange, and I can't wait for you guys to put together a group of people and come and visit us. Well, I'll give you a tour of New York and the floor of the exchange. We can do an Instagram live one day. So from the floor, I go in there every day, and you can see the branding, the marketing, the adrenaline. You can feel it, right? This room was built in 1903. The ceiling is all made of gold, right? Not always the ground is not always paved with gold, but the ceiling is made of gold. And the excitement and the branding in this wonderful world of technology. We do initial public offerings, we do SPACs, we do everything. And there's a CEO or a celebrity every morning rings the bell, and 35 years in the business, I go there every day because there's nowhere that has that energy, right? As I described to you, I know what a wonderful African market looks like. There's nothing more exciting in the world, right? So anyway, let's go to the crash of 2007, right? Financial crisis. So 87 was a financial economic crisis. The crash of 2007, 2008, it was a different movie, a different picture in all respects, right? We already had computers. The information highway was much, much quicker already. The market was at a much, much higher valuation than in 87. After the crash of 87, the market took a number of years to get back to even, but it was much, much higher in terms of the Dow Jones, the S&P 500, all of the indices, right? The market was robust, it was growing, and everything was great. What we did have was a couple of bad actors in the game, as you were to say. So, when everybody in business sees each other face to face and everybody's legitimate, their motives are pure, and business is not always that way. There's usually a couple of bad apples in the bunch, right? And so what we started to see was, and people's nature is to try and take advantage of other people, right? We see it in business sometimes. People who wield a very heavy hand like to kind of screw the little guys sometimes. So what we saw happen was people in banking saw the opportunity to take advantage of people who had less than them. And what ended up going on to become the mortgage crisis, right? The financial crisis of 07 was based on a mortgage crisis. People should go read about it. Once again, it's a very long story, longer than I can talk. But people were selling mortgages and homes to people, right? You know how bankers make money, right? We make money on deposits in the bank. We make money when we lend money to people and charge them interest. Well, it's all fine and good if the people we lend to actually can afford to be lent to. They are good debt, right? If I lend you $100, I'm not going to lend you $100 if you make $1 a year, unless I have a very big heart and I'm looking to the future. I lend you money with the hopes to get my money back in a certain amount of time. That's what business is about. We buy stocks, right? Buying stock is really, I'm making a purchase with money, hoping that the company, through earnings and guidance, will give me back my $100 and a year will be worth $120, right? That's why we're doing this. We're investing in our future, right? I mean, most other things that we buy, the minute we buy them, they go down in value, right? I buy a car, the minute I get it home, it's actually not worth as much as a moment before when I bought it brand new, right? But there are markets. We have a market in the US here, and I'm sure in Kenya also, in sneakers. I can buy a sneaker that has a huge demand for it if I'm willing to wait online for $200, and then in 3 days around the corner, I sell it for $600, right? So the wonder of markets, and it happens everywhere, I know in your back door and in mine, is the most exciting thing in the world. Can you imagine if I take $100 and it suddenly becomes $200? That's why we're here. That's what the market's about. So anyway, 2007, banks were lending money to people who couldn't afford it, right? But they were not going to be able to afford it 30 years down the line. So the guys who were selling these nice little packages, it's like if I take something, put it in a box, I wrap it, and I say, here, you need $100,000, I'll lend it to you, and but you have to pay me back. The first guy gets money. What ended up happening was they started lending money across the board to people who really they weren't bad people. They were just people who couldn't afford the loan. But if you ask anybody, I'd love to give you money, most people will take it without the mature thinking that maybe I can't really afford that. Okay, then people will say, I'll give you a house, right? You can afford it, you're going to be okay. So to make a long story short, this was predatory lending. When a guy, knowing the person cannot afford it, entices these people to take a house, and then they end up going in bigger into debt. The guy who lent them to money really doesn't care. He's moved on to the next person. But you ended up having a whole generation of people who had debt that they could not support. And it's crumbled. That was the initial thing that started the financial crisis of 2007. As I said to you before, it's never one thing. It's a perfect storm. So you had predatory lending and a mortgage crisis. Hundreds of millions of dollars being taken out of the system that was never going to get paid back. Well, nobody knew about it for a while. And then when the door opened, people saw, what's going on? What are you doing, Joe? You know, you lend all that money. You're not getting anything back. What's happening? Don't you worry. I will repackage this present in a nice box. No one will know what's inside. And I'll sell it to my friend over here, Peter, right? So everybody down the line started repackaging bad debt and selling it to someone else who didn't look in the box. And then they resold it again and resold it again. The guy at the end of the road had no idea what's in the box. There were 10 boxes. The guy in the beginning told him it's worth $100. He believed them. What in fact happened was there was nothing in the box. The box was not only worth zero, but it cost money and the box was negative. This caused the banks to go, oh my God, we think we have balance sheet of $1 billion. It's not worth $1 billion anymore. It's only worth 100 million. And when every bank in the United States realized that, oh my God, my pocket is not full of cash. I owe money. Well, that's the trouble. And when the world found out about it, they lost confidence. And that was the other piece of this perfect storm. And suddenly the banks started to crumble, the mortgage started to crumble, and the economy started to crumble. The crisis and the actual crash of 2007 affected people throughout the industry, affected people throughout the housing industry, affected all those people who had bought houses they couldn't afford, right? And the Federal Reserve and the market crashed, right? A sell-off of like last week of 1,000 points is not a crash. That's a bump in the road, right? That's we're driving home from work. There's nothing, no big deal about that. But a crash of the magnitude of 2007, it took us 8 years to get back to even. Okay? That's a long time for people to carry the weight of having lost their homes, their jobs, market devaluing 30, 40, 50%. So that was that crisis. That was the crash of 07. So now we covered 87, we covered 07. We had a couple of crises during this recent administration with our friend over there, Mr. The guy with the orange hair. What's his name? Trump, yes. So we had a number of crises day by day. I believe there was a lot of manipulation in the market under his administration. He would have a fight with China today, market would go down. He changed his mind tomorrow, market would go up. We had tariffs, we had problems with that. So throughout that administration, we had a number of crises, short-term, they weren't crashes, but we had short-term crises due to, international intrigue, right? As we know, that administration was doing a lot of things that were happening behind the garage. And so that affected the marketplace. And so fortunately, not to tip my card of which political side I'm on, fortunately, this gentleman left the party and went back to Florida, and we have a new sheriff in town, right? Before he was to leave, though, he hurt us, he hurt the world in so many ways about how he dealt with the pandemic. And so without talking about politics for more than 1 second, let us go back to February 12th, 2020, okay? Let's run the back to tape here, guys. It's not a long time ago. It feels like forever. It feels like yesterday, but it was just around the corner. So, excuse my hair. It's a little crazy today. Anyway, February 12th, we had, of 2020, The stock market, that's now a year and 4 months ago. It's not a long time ago. The market was we closed on February 12th that day. And you'll notice from me, I'm a little bit of a numbers person. I have I know dates that are significant because this is what I do. You know, I want people to know I'm not a financial advisor. I'm not a stock picker. I'm somebody who loves to analyze why markets do what they do. And if you watch me on social media, you'll see at the end of every day, I'm not going to tell you I like Amazon, I don't like Google. That's not what I do. I don't really care. I want to know why they did what they did. For me, it's a forensic. It's like an investigation. Why did a market like we see every day here go up 1,000 on the opening, go down 600? The Federal Reserve comes out with news, goes up 400. A story comes out about the virus, goes down 300. I'm here to help you understand that because that is a function of how we trade and invest. So February 12th, 2020, the market was at record high. 1 year ago, it's higher now, but nobody would have ever believed that in the eyes of a complete global pandemic, right? Let's go back a minute. February 12th, 2020, the market was at a record high. The conversation was the bank's balance sheet were robust. The consumer was in the best condition it had ever been. Unemployment was, now I'm talking about our economy. I'm not talking about yours. I'm talking about what is churning the US equity markets, right? That's why I'm here to share my experience. Was at a record high. The bank sheets were robust. The story, if you and I were sitting down at dinner on February 12th, we'd be sitting there buying each other a drink, smoking a cigar, going, oh my, how is your portfolio? I've never seen it. I'm making more money. Look at the economy. Unemployment is doing great, right? We did have a little birdie in our ear saying, you know, I heard there's something really bad going on over there in China, but I don't want to hear about it. It can't be good. You know, I don't, let's just not talk about it. You know, I turn on the TV, did the president say something's going on? No, right? What saw happen, which is I'm here to describe storms that, as we described in the beginning, the market was very overbought, yet very strong, robust economy. You had a financial crisis that was about to unfold as the next 6 weeks happened. As we found out about the pandemic, it was declared a pandemic, and the world came to a screeching halt. Everybody, from a Sherpa in the top of Kathmandu, Nepal, down to somebody down here in Patagonia, everybody's life and health and family came to a screeching halt in a massive traffic jam. And then we saw a health crisis. So these three pieces of this puzzle caused something that we could have never imagined in our lifetime, right? I know that you guys grow up in Africa. You've had Ebola. You've had health crises before a number of times. We had with AIDS. We had it here and with AIDS too, right? So we've seen health crises happen in isolation. We've seen financial crisis happen in isolation, but never before did we ever see of the magnitude, surely in our lifetime. All three of these crises hit the same all the weather system there one day when the reality of what was happening in China was happening. People started dying in the thousands. It started moving across the earth to Africa, obviously, to Western Europe and Italy. If you remember, Italy was one of the first places to go into a shutdown. People were dying in the streets. To cross the ocean to US and then and go all around the world, right? And I ended up getting, it's a story I need to tell also because I was one of the first people to get COVID, right? I got COVID on March 17, 2020. And I have been sick ever since, and I almost died. I was sick for 4.5 months. I've had 4 surgeries, collapsed my spine. I had meningitis. I had 103.7. They did not think I was going to live. So I lived this life in this pandemic. So I've gone through my own health crisis, and it's not over yet. That's that part of the story. my life will never be the same of what I've experienced. February 12th, that day I described, where everything was, the flowers were blooming, life was beautiful, champagne on the table, until March 23, 2020. That's 6 weeks later, right? 8 weeks later. No, 6 weeks later. The market went from a record high, right? And not just a market record. I mean, everything was at the top of the game. We were all walking around in fancy suits. We had our hats on, smoking a cigar, eating a nice dinner. And 6 weeks later, the market was down 11,000 points on the Dow, multi-digit percentages on the S&P. The world came to a halt. The cruise ships started going. People on the streets, I'm sure in Nairobi, were not able to interact. People were dying already. You were wearing masks. You didn't know whether the guy next to you online to get a Coca-Cola was going to breathe on you and kill you. You didn't know anything. And your economy, your job, your life, your health, your bank account suddenly came to a freeze. And not only you and me, not a soul on this earth escaped the wrath of this experience in multiple, spiritually, financially, emotionally, economically, across the board, right? Scorched earth, right? This was like, if you believe in God, this was a godly moment, because we have never seen anything like this story happen. Let's get back to business. The market on March 23rd was, our market on the floor of the stock exchange had multiple days of down more than 7%, multiple times a day. Let me repeat that. That means we would come into work and the market would open at 9:30 down 2,000 points. We have what's called circuit breakers, which means to protect the investor, when a market opens down more than 7% as a market, not individual stock, we stop trading and we let everybody go, whoa, 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 what's going on here? Is this real? Are we getting emotional? Where is everybody's money? Where is our shopping list? What are we doing, right? Did somebody just hit a bad button? Are we having a bad nightmare? What's going on? And this circuit breaker stopped trading down 2,000 points at a clip. That's a lot, right? Happened multiple times for 6 weeks. And we saw the market. Everybody, when we're done with this call, should go on Google and look up the S&P 500 or the Dow of a chart, right? And look at that devastating, I wish I could show it to you, but I'm on an iPhone. The devastating look of that escalator going down, that ski slope, that avalanche, right? In those 6 weeks where the market went from the record high to the record low, right? Now, to put it in perspective, billions and trillions of dollars in value were lost, right? We saw that. Companies went from 80 to 12. Companies, everything from hospitality, restaurants and food, to cruise ships, to commodities, to everything came to a standstill. And suddenly it's literally like going to your pants pocket to get dressed for the day. And last night you had $100 and you go into your pocket to buy something and there's $1, right? That $100 became worth $1. And that's for 3 billion people. Everybody's worth and everybody's ability to make money and to thrive and to be a health crisis, an economic crisis, and a market crisis. What ended up happening is a playbook we could have never imagined. The only way to prevent a crash turning into a disaster is if the powers that be in the financial industry don't step in, right, and support a market that's going down, right? 14 million plus people lost their jobs forever, but we surely saw at that time 30 plus million people suddenly lost their jobs. Everybody who had a day job didn't have a day job anymore, whether you worked at JP Morgan or whether you worked at Burger King. It didn't matter. The doors were closed. Everything was shut. People suddenly went from bringing home a paycheck, money to buy food for their children, to having no way to create income throughout the globe. Even the guy you would go to borrow money didn't have any money. right? And that's when you know this has hit the fan, right? Not to use bad language. So in America, the Federal Reserve had no choice. We've seen it happen before. That's how we got out of the crisis of 2007. The Federal Reserve bailed out the banks. They wrote a check for $800 million, $800 million, a lot of money, thing like what happened this time, to support, maybe it was more than that, to bank stop the banks so that the banks would not go default, right? We know, and I'm sure we've seen it across the world during financial crisis, when the bank doesn't have enough money to give you $100 when you go to the ATM, they close the door, right? And what more worse way to cause panic is if you go to the ATM and you go and it says, I'm sorry, funds unavailable, right? Insufficient funds. Well, that's what they were fearful of, that with this economic collapse globally, that everyone would go to the bank to get out some money for dinner or paper towels or Coca-Cola, and it would say insufficient funds. So the Federal Reserve stepped in. In 2007, they stepped in. It took years with all the money put in the market. They put in, I think it was $800 billion, my bad. They put into the system over 3 years to bail out the banks so that when anyone came to the bank to get money, they would be able to give it to them. Maybe not all they asked for, but they were able to backstop the banks. What happened here, the magnitude of the global crisis, meaning that people were dying in the thousands. Here in New York City, there were people dying in the streets, in the parking lot of the hospital, right? I don't know about Nairobi. I'm sure the same thing happened there, but we've never seen that here before, okay? And so the only way to prevent that, you couldn't go out to the store to buy food. We were sheltered in place. I was locked in my apartment for 3.5 months in quarantine with 103.7 temperature for 3 weeks. So, and I almost died, and my life came to a halt. My family had to stay away from me. I was literally living on just water because, and sometimes a delivery guy would bring me some juice. So I saw death really, really right up close with this thing. I was incredibly ill, and with meningitis too. So my brain was fried. You're getting just what's left of my brain. Anyway, so the Federal Reserve stepped in, unprecedented, and committed $3 trillion. The Federal Reserve stepped in and committed $3 trillion over a 3-month period. That's the difference between driving your car with very little gas and not premium, regular gasoline, and just tapping the gas pedal. And the difference is you've got an 18-wheel truck, he's got premium diesel gas, and he's going down the road at 200 kilometers an hour, right? They threw everything at this market in fear that if they didn't, that the world would collapse. Literally, we would just, as bad as it was, and I'm sure you've experienced bad, I'm sure everyone on this call has lost a loved one from this disease and still in the middle of it, the world would have been in way worse shape than it is today. And so in a desperate move, they decided we are going to buy everything there is in sight within the financial community. We are not only going to support the banks, we're going to support industry, we're going to support the corporations, right? We're going to support people, individuals with a stimulus package. And they started sending people checks. How do you prevent fear and panic? You send someone a check for $1,400, right? That will, at least for short term, stop the bleeding, right? Everybody here, and I know unfortunately it didn't happen globally, but in the United States, to prevent panic, as privileged as we all are over here, they started sending checks, and every day in your bank account, there was a deposit by the government, not a withdrawal. And everyone was sitting there going, oh my God, life's not so bad. I can sit at home, get takeout, watch Netflix. I got $600 in the bank. It's a beautiful thing. And so that enthusiasm and that support and that bailout, it's a bailout, right?
Yes.
Was able to support the market so that it was so big and so furious, which was a fast and furious response to the bad part of the pandemic in order to backstop the economic destruction of the United States and the globe in so many ways, because our economies are incredibly connected. What we saw was, and there's no playbook for it, there were still, even with all the stimulus, people really believed that it was not going to be enough to support the stock market, right? But it was. We were able to get back to even here in the US equities market and in around the world by August of 2020, 4 months later, we were back to even. I told you before, it took 7.5, 8 years for the crash of '07 to get back to even. This took 3 months, and it was a way bigger crash, right? So that's a good thing. The unfortunate was that the robustness in the market not carry over financially as you were in February 2020, right? While the stock market is trading at record highs, you and I are here, July 30, 2021. The stock market is at record highs, crazy close. I wish I had some Dow 35,000 hats. We are hitting record high across the board in all the indices. Even in the eyes of a pandemic, we're not out of this. We're not out of trouble yet. We're now getting another surge, right? However, and no one would have predicted this, the stock market is at a record high while we are still just beginning to reopen, right? So let me step back for a quick second and say, so how does one trade? So I'm trying to, in order for me to explain to you how to explain, I told you I'm a forensic, has good earnings, or Google has more users, or Netflix sold more subscriptions. I don't care about that. I care about the individual investor knowing how to navigate when a stock goes from 2 to 408 and back 40, right? That's what happened in GameStop, one of the meme stocks. I'm trying to help the investor who has never been here before at this party to know what to do to preserve his capital. My biggest fear is that people now suddenly are invited to this party called the stock market. They come, they don't have the education on how to trade the volatility, and they lose all their money, their account blows up, and they leave the party angry at you and me because we got you into the stock. You told me this was a get rich quick scheme. You told me it was a no-brainer that you just press a button and everybody's going to make money. It's not the case. It's not true. So I'm here to try and give you the reality check on if you want to invest in the market or you want to trade the market, two different things on how you do it successfully. 85% of people who try to trade the market lose. I don't know if you have casinos in Nairobi, but the reason that casinos are very good, strong companies to invest in is because the banker always wins. The reason the casino is open is because they win and most of the customers lose. Otherwise, they wouldn't be in business, right? Right? Las Vegas exists because 8 out of 10 people who go there lose to the casino. Wall Street is only a casino if you don't and you didn't read the rules and they didn't give you a play about I'm lost, right? Before I go to a game, is this rugby or is this football? I don't know this game. I don't know the rules. In order to trade the market successfully, there are good habits to learn, there are rules to learn, and there are criteria, ways to be successful. Most people who come to this party lose and they go home with the tail between the legs. So I would imagine that the people on the call are long-term investors. I hope everybody, one of my taglines is, please, I want you to invest in stocks and not stuff, right? We are a generation of people who need to have the next best thing, the next new thing. I don't know about you guys, but when the iPhone 6 is still working fine in my hand, and the iPhone 7 comes along, I got to have the 7. And I know my children need to have the next sneaker that comes out, or the next thing, whether it's broken or not. I know things in Africa, it's a little bit different. You guys are a little more resilient to you. I've driven around a car in Benin, and I know that you hold on to your cars for about another 20 years than we do here. Here, if there's a flat tire, they go get themselves a new car. I know that's not always the case. So the bottom line is we are a consumer-based society, and I love to tell people that the next time you need to buy your next cell phone, even though the one you have is not broken, go buy 1 share of Apple instead of that. And in a year, you can buy 3 Apple iPhones. So I say that to say invest in stocks, not stuff. The stock it is now entry, fractional investing, but there are applications now where I can buy $50. You know, Amazon trades for, how much does Amazon trade for? $1,800 a share, right? Something like that, right? So if I don't have $1,800, I can't buy 1 share of Amazon. In today's market, you can buy fraction of Amazon. You can open up an app that will buy me $50 worth of Amazon. How amazing is that? If I think Amazon is a great company, the largest e-commerce company in the world, who's now flying spaceships to the moon, right? In the old days, I could not invest in this company because I didn't have $1,800. In today's market, with $10, I can buy $10 worth of Amazon. So how did we trade this pandemic? How much time do I have? You know me, I talk forever.
No, it's okay since we started a bit late. As we prepare for the questions, you can finalize on your...
Cool, give me 5 minutes and you would do questions. So the pandemic comes along, there is a infrastructure package, there is a stimulus package. The stock market stopped going down and it started to go up. And we saw it go back to even in August, and we've seen it go up in some stocks 100% since then. So while that offers a lot of opportunities, we've also seen incredible volatility. So what stocks benefited during pandemic, right? The Zoom, right? Zoom, the company that owns this call we are on, right? In the old days, we were never able to communicate over this Skype or Zoom or whatever. So companies that were represented the ability to video chat during pandemic went skyrocketing. Stocks like Housewares Company, people were sort of staying at home, not vacationing. They had their grandparents moving in their house. They need to remodel. Those stocks benefited from the pandemic. The e-commerce stocks, people were not going to the store to buy things. They were buying it online. Those stocks benefited from the pandemic. The food delivery systems benefited from the pandemic. What stocks did not benefit from the pandemic? The cruise lines, the restaurants, the airlines, and the casinos, right? So those stocks got sold and these pandemic-friendly stocks went up. The volatility was huge. Then we had the event of the meme stocks and Wall Street bets, stocks that went, as I described GameStop, the short squeeze. GameStop went from 2 to 483, back down to 60. AMC went from 50 cents to 75 and back to 10, right? We've seen incredible volatility. We've seen people who are new to this party listening for advice from the internet. There's 2 things you don't go to the internet to get advice about: medical problems and financial investments. That they don't have your best motive. Their motives aren't pure. They don't have your best intent involved, right? I can go on the internet if I have a cold, and in 2 minutes, the internet told me I'm going to die in 3 weeks. I can figure out that I have every disease on earth. Well, it's the same thing if I go on the internet. Is IBM going to go higher? And there's going to be a million people, yeah, buy IBM, it's going higher, or buy GameStop, or buy. Never go to, if you hear about an investment on the internet, that train has already left the station. Don't follow advice of the hype. Hope is not a strategy for trading. I beg your audience to know that technical analysis is the only defense against volatility in the marketplace. That is education. That is risk management. That is putting in a stop order. There is opportunity in every stock out there today, every day. People have this fear in their heads who don't have experience. FOMO, right? Fear of missing out. They see a stock go from 2 to 60, and everyone on the Instagram is telling them it's going to 1,000 or to the moon, and they buy it. And the next thing you know, it goes straight down because it's hype. You're getting advice for, you don't know who the guy is. Am I going to take advice about a girlfriend or about my health from Instagram? No. But everybody is out there trading from Instagram, trading from Wall Street Bets, Reddit. Who are these guys? It's ridiculous. So I'm here to help educate people. I have a school called Wall Street Global Trading Academy. We'll talk about it on the questions. Technical analysis is what I teach. I don't ask me to recommend a stock. I don't do it. Sometimes I don't even know or care about the companies we are trading. We are traders. What is trading different than investment? Long-term investing, I buy something in 10 years, it's a guarantee that it's going to be higher, or in 20 years. If I invest in my future, I hope you all go out there and spend $10 after we get off the call, buy $10, spend $100, buy $10 of 10 stocks, put it away, never look at it again. But if you are trading, and this is a trading lounge, that means that people are coming into the market, trying to make $10 a day, $100 a day, set a target amount that you want to make every day or lose. Every trade is not a winning trade, guys. This is not about get rich quick. This is about making $10 a day, $50 a week, $300 a month, or $50 a day, $250 a week, $1,000 a month. Whatever is your target, whatever is disposable income for you, whatever is enough. Now, you may end up doing so well at this that you go on to be a trader as your career. Maybe you make enough disposable income that you can pay your bills and go out to a nice dinner with your family. Whether you make a little bit of money so you have more time to be with family, right? Time is the only commodity we can't get back. We can get back anything except time. So I'm sharing my experience in the market, trying to inspire people to trade, right? So they are financially independent, because this is a generational time, guys. If you have technical analysis as a tool in your toolbox, and it's all about the toolbox, guys, you know that. If I show up to a guy with a flat tire and I don't have a wrench and stuff, why am I there? No point. But if I show up and I never know what I'm going to run into. So technical analysis gives you the tools to trade any stock, any market, no matter how volatile. What I teach you is never turn a winning trade into a losing trade. What do I mean by that? You put in a stop order. If you buy a stock or you short a stock, the minute you get in it, you have a strategy and a plan how to get out and be profitable or not lose a lot. That involves risk management, stop orders. Every time you enter a trade, you have a plan and you have a stop order. What does that mean? I don't know if you know about baseball. You're always trying to hit a home run. And it's not about home runs. It's about singles and doubles. If I hit a single 1,000 times, I'm running around the base all day long. If I hit a home run once, and then the next one is I get called out, I am out. My account is blown up. So consistency, discipline, patience, risk management, technical analysis are the key things to be a successful trader. Now I let you go.
Thank you. Thank you for that, Peter. Basically, the market has really changed, and initially markets used to that element of human interaction is no longer there. So you basically do a lot of trading electronically. Now, what gives you an edge given that shift or change?
Okay, so my world has changed as a trader on the New York Stock Exchange, because we used to be all human elements, human interaction. Now it's about 25%. So there are less people there, but I still go there every day because the adrenaline, the energy, the symbolicness of the room, the interaction with whatever humans are there is significant and very relevant, even more so in a volatile market. But what the most other markets throughout the world are already electronic, and they will only be electronic, right? Even our other sister platform, NASDAQ, is all electronic. There are no humans there. So while it's changed for me in my career because I love the human action, the bottom line is we make good with what we have. I fought the technology for a long time, but the market is way bigger than Einstein, right? It's way bigger than Peter Tuchman, right? They were going to advance to technology, whether I was there, whether I liked it or not. But what it's caused and created, if I come and I look to you face to face in a trade, and I say, we talk for a while, and I know what you have in your pocket. You know, you say, hey, Pete, I got 100,000 shares of Snapchat to sell, or Alibaba, or whatever. And I say to you, you know what? I have 100,000 to buy. Well, why don't we discuss it? Let's trade some stock. We're looking eye to eye. You know the difference, right? I'm sure you know the difference. What it's like to interact with someone, whatever you're buying, flowers, food, or stocks. If I see you face to face, there's a different confidence, right? A different trust. So when the market is fully electronic, people are not as trusting. So when I'm hiding behind my cell phone, I'm sure you know about it in terms of dating and in terms of texting. You can say anything behind a text, right? And you get yourself in trouble. So you can hide an order behind the box on the computer. So I may have 1 million shares of XYZ to buy, and my adversary, my seller, will never know what I have. So the lack of human interaction has caused for way more volatility. And so in this volatility is what we've seen. Your audience are people who obviously like the market and watch the market regularly. And they've seen, unless they're living underneath a rock, they've seen what's been going on in GameStop, AMC, Bed Bath & Beyond. They've seen what's going on in the Chinese stocks over the last few weeks. They've seen IPOs go up and down like crazy. They've seen WeWork, right? This company that turned out to be fraud. They've seen the food delivery system spike up. They've seen the Wall Street bets and the Reddit guys march up the short squeeze. So that is a function of non-human interaction and huge volatility. So there's really only one message to send to your audiences. What has changed is the volatility makes for wild moves and vacuums in the market. And the only defense against this volatility to protect your profits and not get blown up is technical analysis and rigorous money management, which is stop orders, which I'm happy to talk about.
Typically, Peter, is it important for anyone who is starting out as a trader and as a retail trader, in this case, to really understand the process that a transaction goes through from the moment it is executed, like typically what you do on the floor as a broker? Can you please take us through that process?
Absolutely. So guys, ask me, is it appropriate for a new person to know all of the ways this engine works before they get in? And one of the things that I've been saying now, which is one of the reasons I've been doing this for 35 years. I did not need to launch this course to try and educate. I did not need my journey to go towards education if it wasn't by the fact that I think it's necessary now more than ever. There's 40 million plus new people trading it, right? There are inexperienced people trading in this market. And on top of that, once again, another perfect storm. The market volatility is unprecedented due to the internet and due to the pandemic, right? So where does that leave us? If I beg you the question that if I wanted to become a pilot, that was my dream, right? To pilot planes, right? Would I go online and look up how to fly a plane? I get a course, some guy sells me $99. This is how you fly a plane. You got the keys from the guy at the airport, you turn it on, and you hope that it's going to work out for you. If you wear a life jacket in case the plane crashes, right? Would you do that? Or would you go to school online, go to the airport and take 100 hours of courses? Then you get in a plane with as a co-pilot and watch him fly for 200 hours before you would ever think of flying the plane yourself, right? By taking on the stock market, you are now piloting a new business. If I become a trader or I trade the market, you need to look at it as a business. Would I go into the baking business if I didn't know how to bake? No, unless I was really bright and I went and did my homework first, right? That's why we start school not in college, we start school in grade 1, right? It's so important. And you're talking about something that's money, right? It's not like, this is all just not real. It's smoke and mirrors. And, I trade for fun. And, if it doesn't work out, my bank account will be green again tomorrow. It's not the case, right? So what is so important, and this is one of the problems, and this is why I did the course now, as opposed to any other time, is the platforms like Robinhood. You guys know about Robinhood, right? Obviously. Yeah. Okay. So whether it's TD Ameritrade or Robinhood or all these free apps on your phone that everybody with $100 and an iPhone can trade the market, what they don't do is say to the people, there's no disclaimer. When you invest $100, $1,000, $5,000, $25,000 in a trading account, there's no disclaimer saying to you, hey guys, do you know what you're doing? Before you commit to losing your full investment, have you done your homework? It doesn't say that. It doesn't say that. It kind of gives you the feeling like, you know what, this is easy. You press a button, and then tomorrow your 25,000 is worth 50,000. There's a million people out there promising you, give me 1,000, next week I give you 8,000, right? You look at them, they're on Instagram all day long. Once again, it's BS, right? I'm sorry. It's not true. That's not how it works. But what's wonderful is that if you do the homework and you do learn from somebody who has 35 years experience, right? Not some guy who's a YouTube sensation who has none of your best interests involved, who says, he already bought the stock before he tells you to buy it. So when you're buying it, he's selling it. We call it in English, pump and dump, right? If everybody wants to know what that is, go rent the movie Wolf of Wall Street. You see who the bad actors are in the space. So if I'm going to do this, I need to take it seriously, right? I need to know how the engine works before I take apart the engine. Otherwise, my father's going to come into the garage and go, "What? You told me you know how to fix the engine." I was lying, Dad. I have no idea how to I took it apart, but I have no idea how to put the engine back together, right? So education is the key piece of the puzzle that they're not talking about enough. To this now, there are people out there who know more than me. Trust me. I'm not that smart. I may look like Einstein. I'm not that smart. There are people way smarter than me. But now in 2020, 2021, there's 40 million new people who don't know what I know, right? About this movie. I've seen it before. So I'm so excited that they've all been invited to the party and the movie. And what I'd love them to do is stay and be successful. That's my pure motivation, is that now that everybody is coming here and the market has gotten your attention, I don't care whether somebody told you about crypto and that's why you're here, or you saw the meme stocks, that's why you're here, or you're sheltered in place and suddenly you have an extra money and somebody, or you met Sylvia on the street and she said, join my trading lounge. I don't care what brought you to the market and your eyes focus on me and you guys, right? You're there, I'm here, we're thousands of miles away, but we're talking about the same thing. How wonderful is that? I'm so happy you're all here. My fear would be that you came, that you got bad information, that the guy sold you the fish that has been sitting out in the sun for 4 days. And he said, it's fine, the fish is good, don't worry about it, you won't get sick, right? Or the guy who said, buy the stock, don't worry, it's never going down. I would hate to watch that happen. Your account blows up and you leave the party and you never come back. When you could have done the homework, for a small investment of time and money and become financial independent and get some disposable income. How exciting is that? That you can go home to your buddies and you go on Friday. I had a great week trading. I listened to Peter. I learned technical analysis. I made $160 this month. Let's go out and have dinner. How great is that? You get to enjoy time and things with your friends. So the education is the key.
All right. Thank you so much, Peter. As we conclude, you can tell people about, I normally see you on Lunch and Learn, the initiative that you have for your education, and how people can get in touch with you if they wish to subscribe to your education program, and your website mentioned. Yeah.
Okay, I appreciate that. Thank you for offering it up. So what we have done is, a partner of mine who I met on Wall Street 35 years ago, he was a market maker. It's a long story what that is, but these are the guys who, in the old days, before electronics, he was the guy who put buyers and sellers together. It's, you know, it's like no other, it's like Allmark. You know, the funny thing about
market maker, essentially.
He's a market maker. Okay. If I go to in Nairobi, I go to a market in New York, whether I'm buying lumber, food or oil or whatever, the guy who has the inventory, right? If I'm a buyer, I run a restaurant, and there's the guy, he has tomatoes and hot peppers and fish. And I go to him and I said, you know, on the menu tonight is hot peppers, tomatoes, and fish. I'm a buyer. And then there's a farmer behind him who goes, great, I'm a seller. I have a farm outside of town. I'll sell it to you. And you have a discute, you have a conversation, you have an interaction, right? So he was the market maker. He went on to retire many years ago, and he now is an educator. So he is the person I've known for 35. Not everybody, a lot of people know about markets, but not everybody is a great teacher, right? I am not the teacher. I am the motivator. As you can see, my excitement for what I love is palpable, and I hope it gets people inspired. My partner, David Green, is a great teacher, right? I'm sure you know that sometimes you went to school, there was a guy who just, you hated going to his class because you had to know, he wasn't a good teacher. You know, no matter what he said, I just didn't get it, right? David Green's a great educator. So we've curated a course. It is really very accessible for anybody. We always say, if somebody does not know a stock from a sock, and you take my course, you'll be able to trade the market. This is for somebody who's been trading the market and has been running hard, volatile stock. And it's for somebody who is an advanced, who in the past, as I said, this is not your grandfather's stock market. In the past, people used fundamental analysis to trade. I believe this new stock market we are in right now, the Wall Street 2021, is a place that you need technical analysis, not fundamental analysis. So we made a live recording. It is 7 sections, 22 videos, and we basically teach you everything you need to know from the ground up about how to get into this market and learn. We teach you language of the stock market, what it means to have a bid and an offer, to buy stock and short stock, to take a profit, to do all the things you need to do to understand the lingo of a stock, about earnings, about guidance. We then teach you about charts. Stocks and technical analysis trade through charts. I'm sure everyone in your audience has seen charts online about the candlesticks and what they mean, about moving averages and what they mean. For somebody who has no experience, this is just mumbo jumbo, right? You don't understand any of it. I'm here in the course to explain to you what all this means. Then we actually help you set up your charts. If you've never done that before, the course is a very detailed way of what platform to use and how to set up your charts, which means you need to put lines in your charts and dots in your chart to make sense of them. For those charts to start to work for you, we call them moving averages, relative strength index, and pivot points. You don't need to understand what those mean right away. They are fine. They are mathematical formulas using historic data to give you the probability that when these charts stand up, you need to know why. We're just to take my word for it, that with the course, you'll learn to put these things input in your charts, And that will set up a beautiful picture, like when you're connecting the dots. It will help you connect the dots to show when the probability of a stock is going to stop going down and start going up. We just know it because we've seen the movie before. Technical analysis is run off of historic data. And if you input the historic data and these pivot points, the charts will tell you, trading the stock market is just not throwing a dart at a board. It's not we are not Zorro here, where you close your eyes and go, I want Apple to go up, boom, right? That's not how this works, because it may go up, but it may go down, right? And what that means is your profit of $10 can turn into a loss of 100, right? Very quickly, trust me. That means that your profit of 1,000 can go down 50,000 very quickly. So we teach you the language of the stock market, what is a chart, and how to set it up. We teach you the 5 technical analysis trades that the reason we give them to you is because they work. Why we found them to work over time. We'll help you set those trades up. There are criteria and rules and habits that people who lose are doing, right? This isn't rocket science. If you show up at the party, you don't know the rules, you're going to get thrown out. So if you show up to the party and you don't know that you need the probability to be in your favor when you get in a trade, if you don't know that you need a plan of action the minute you hit that button, if you don't know that you need to put in a stop order to protect if the trade goes against you, and it happens. Don't believe anybody who tells you they win every time. I'm the first guy to tell you we don't win on every trade, but we win on more trades than we lose. And when we lose, we don't lose very much because we use risk management. Risk management is a stop order. If I buy 1 share of stock at $100, I put in a stop order. We'll explain to you what a stop order is if you don't know, at $99.50. So I know how much I'm willing to lose if the trade goes against. I will lose 50, I'll lose $5. Let's say I buy 10 shares. I'll lose $50. But I'm willing to lose 50 in the event that I may make 100. And if the stock goes up in my favor, I put a stop order at $100.50 if it goes to 101. I start to sell it when it becomes profitable. I put in a stop order so that I never turn a winning trade into a losing trade. The biggest mistake people do, they buy stock, they get all excited because it's going up. They think it's going to the moon. They never take profit when they're up 10%. Some news comes out, somebody does something and they go to get a drink and they come back to their computer and it went down from 100 to 98 and they went from up 100 to down 200. And maybe that's all the margin they can handle. They sell it at the bottom and they've lost their money. Well, how much sense does that make? But most people do it. They're not bad people. They just don't know the right habits. They don't know the rules. There are rules to this game. As I said to you, if I want to fly a plane, I don't grab the keys and hop in and hope that it works out. Hope is not a strategy for trading. The technical analysis is the strategy for trading. So I say all that to say that we give you a 7-part series, 22 videos. We talk about crypto. We talk about swing trading, option trading. It's fun. It's me live with David Green. We do all the charts. It's very hands-on. Then what is our differentiator? First of all, it's very affordable. It's $449. You can do it in 3 payments if you can't afford the $449. Our differentiator is everybody who buys our course every Thursday night gets to be live with me and David Green on a Zoom call. Okay. There are many schools out there who claim to teach technical analysis, but none of them will actually, when they sell you the course, whether it's $1,000, $5,000, goodbye and good luck. They never see you again. Every Thursday, you get an invitation from us if you buy the course for a live Zoom call for 1 hour, an hour and 20 minutes to ask us questions. Yesterday, we had 66 people on the call. Everyone from beginners or people who are trading already took the course a while ago. They interact with each other. We're setting up a Discord room that everyone who's bought the course gets to talk with each other. Did you do that trade that David set up? How did that work for you? Are you winning? Are you losing? Are you following the rules? What's going on? And then as you're sitting at home watching these videos in your spare time, depending on, I don't know what your time is like, you get to get on this call live with me on Thursday, every Thursday at 5, and ask me the questions. Everybody learns differently, guys, right? We know that. Some people need to do live, learn in person at the university. Some people learned very well, offsite through Zoom, right? Some people don't learn well that way. They need human interaction. Well, I'm giving you the best of all possible worlds. It doesn't pay for you just to watch me on video doing advanced things if you haven't done the fundamentals. So the course is very accessible. It's very easy. It's fun. It's engaging. It's me and David with charts and stuff like that. We have a lot of fun doing it, as you can see. I love what I do. And then every week, whatever your question is, you get to be live with me and talk about, Peter, I tried this, it didn't work. You know what? I followed 2 of David's rules, but I didn't listen on the stop order and I still lost. And I'm going to grab you by the collar and I'm going to go, you can't do it your way. You came to me to teach you. So you got to put aside all your old habits and try the new habit. So the course is available. You get live mentorship as long as I'm alive, live coaching with me and David going forward. We are going to have a masterclass probably once a month for people. I think it'll be an upsell of $97. We're going to actually take a vote from our community. We have a Wall Street Global Trading Academy Facebook group. People always show their interest. It hasn't worked out as well as I wanted to. We ask people what they want to know about, and then we do a course on it, a 1-hour webinar. The one that we're going to launch, I think, in August is called Risk Management Through the Eyes of the Meme Stock Generation, meaning that all those guys out there who are trading these volatile meme stocks, that we will help you navigate through them and not lose a lot of money. So we have a big community. The Facebook group is free. What we also have is for people who missed the Zoom call. Let's say that we are in a different time zone and you cannot be up for the Thursday night Zoom call. We make a recording of it. And then in the membership page of our website, everybody for free can go on the website, Wall Street Global Trading Academy, and read about the course before you buy it. We have the Zoom call every Thursday night, but if you did not make we record the Zoom call. It's a full hour Q&A. It's available for you if you are in a different time zone and you want to see us live. We have, there's a platform here in America called Benzinga. Benzinga is a financial news and a platform that gives you everything about the markets, earnings, algorithms, whatever. My partner, David Green, trades the market live every Monday, Tuesday, Wednesday on Benzinga YouTube. It's free. You go on Twitter to Benzinga on Monday, every morning at 9:29. You hit the YouTube channel. You get to see David actually trade the markets live. If you missed that, we record it and we put it on our YouTube channel called Wall Street Global Trading Academy YouTube, where you can actually watch it. Don't trade off it, because if it's a recording, it's not real time. I beg you, don't trade something from yesterday and then get angry at me. So there's many ways to interact with us. Some of them or the math class. Some of them, if you just need to get your feet wet, are watching David live or me on Instagram. We're going to be doing a lot more things. I am partnering up with a number of different firms. One of them is Quant Data. It's a trading. It's a data aggregator. It's a wonderful thing for your community. What they do is, you know, that people in the investment community, institutional investing, have access to a lot of things that are very costly. Information about who's buying what, which hedge fund. You know, everybody loves Kathy Woods. You know who Kathy Woods is?
Yeah.
The lady from this ETF. So everybody wants to know what Kathy Woods is buying. Everybody wants to know she's a guru. Everything she's buying is going down, but we don't need to talk about that. Anyway, so Quant Data offers the information that institutions get to the retail investor. So everybody, I wish you to check that out. One of them, another is Wolf Financial. Another one of them is investing.com. Guys, if you go to Instagram, I talk about all the stuff I do every day. I give you a fun walk around of the floor about what the market did. I'm very easy to reach. If you want to reach out, said, I saw you on Sylvia, and how do I find out more about the course? You can instantly link in my Instagram to our website. If you don't have the money now, check it out and learn about it. Get excited. You'll find the money if you're interested to trade and be successful. If you've been trading the market and doing nothing but losing, I beg you to put $449 aside and do it, because you'll make it back in the first couple of real trading days. You're losing because you have bad habits. You're losing because you don't know the rules. We will teach you good habits and we'll teach you the rules. So Wall Street Global Trading Academy is super simple. It's super affordable. It's super engaging. There's a fun community. We are really growing globally. I'm doing a collaboration with U Capital 24, a fintech social media company in Italy. So, the trading community, it's really nice to be on calls and groups like Sylvia's made here with you to understand what other people are doing and trying. It's very important to who you take advice from, right? You surround yourself by people who are smarter than you. You don't listen to somebody who says they do nothing but win on every trade, right? And you don't listen to anybody who said, I just bought XYZ, you should buy it too. And then they're going around the back door and selling it to you because it's just BS. So we teach you, we are not here. I specifically, me, Peter Tuchman, will never tell you what to buy and sell, but I will give you the information so that you can make the decision yourself, right? A educated decision to what to buy or short on your own from what I've given you access to as far as education.
All right. Any parting shots from my co-host before you wind up?
Thank you, Peter. You are very, very inspiring. Your webinar, the conversation was inspiring, and congratulations for trading for 35 years right now. And your story also dealing with COVID is quite inspiring. And guys, personally, I have checked out the live trading rooms by David Green, and there is nothing like it. That is what I can say.
Good.
Thank you so much. Yeah, we'd love to have you again in the future, of course, and then also with your partner, David Green. And we also ask guys to continue opening live or practice account with Scope Markets to also get to apply the lessons we're getting from the likes of Peter Tuchman. And we love your story and thank you so much. And we'll link this, we'll have this recording on our YouTube channel for people who might want a reference. So that will be up next week on Thursday. So thank you guys for tuning in, and until next time, goodbye. Cheers.
Thank you, everybody. Thank you, everybody. Really appreciate it. I'm honored to be on the show with you. I'm available anytime you want.
All right.
All right.
Cool.
All right, guys.
Happy trading.
Happy trading, Peter, and quick recovery. Okay.
Thank you. I appreciate it, guys. Be safe, right? And check it out. If you need me, I'm very easy to reach.
Okay.
All right, cheers.
And is the recording over?
No, you can end it, Peter. But
I can end.
Before I end the recording on my side, guys, and as Peter ends the recording from his side, I'd like to quickly take you through Scope Markets website and everything that you've had us talking about, including opening an account and trading stocks. You can still be able to do it right here in Kenya. You just simply log into the Scope Markets website, go to the Scope Markets website, and when you look at products, you have shares right there. You can be able to buy actual shares. You can be able to also trade in CFD shares. And you can also trade these shares with leverage. Make sure to contact any person at Scope Markets. The number is right up there. You will get in touch with an account manager and they will take you through the process. So with that, guys, we have to end this from here, and we are really looking forward to talk to Peter again and talk to Peter and his partner, David Green, and make sure that you watch out all the live recordings that they do, all the live trading that they do, in order for you to get more insight. So till next time, guys, have a happy and a nice weekend. Happy trading all.
Happy trading, everyone. Thank you.
Thanks guys for tuning in and sticking with us to the end. We hope you have learned something new. I would like to appreciate Scope Markets for sponsoring this webinar. Remember, you can open a live trading account with Scope Markets and apply the lessons shared by the guest in this webinar to your trading. Many thanks to our guests for speaking to us. We'll be open to have you in the future. Till next time, goodbye.